In 2025, there will be a new and frightening rule pertaining to international finance that most people are not aware of. One sentence will change the world in the middle of all the legal and policy debates. It requires that high-liquidity digital assets like XRP be included in the core reserves of all major institutions. Speculation and hyperbole are no longer acceptable. This is being done in order to make money so that banks and normal buyers may continue to operate. Central banks as well as the Bank for International Settlements are working together to make the financial system more stable through the adoption of Basel III, which is a worldwide project. One element of that general framework is the rule. On the surface, Basel III seems like a good concept. By forcing banks to hold assets that are more secure, liquid and readily available during emergencies, this strategy aims to avert another financial catastrophe, like the one that happened in 2008, but what they don't offer is information on how these mobile assets are being updated for the digital era. This is not just a concept, and it goes much beyond that. The cryptocurrency known as Ripple is already linked to financial institutions in more than 55 countries, works with ISO 20022 compliant systems, and is poised to be the link between the next wave of international payments. The statement that financial institutions will never use cryptocurrency is no longer true. They not only utilize it, but someone is directing them to do so. Rather than actively battling cryptocurrency, legislators and governments are now attempting to incorporate it into the core framework of the international financial system. Digital tokens are being added to the definition of high-quality liquid assets, or HQLA, as defined by Basel III. Because it can settle in real time and has almost no processing costs, XRP is the most efficient choice. In contrast, ordinary investors are not being told anything important. The great majority of people have no idea what is happening at their banks or how much of a risk they pose to their money in the case of a disaster. They think that their funds are safe. However, the truth is totally different from what they believe. Regulations requiring financial institutions to maintain liquidity buffers allow bail-in procedures. This means that in order to keep its balance sheet stable during a crisis, your bank is legally permitted to turn your savings into stock. In other words, the money you have worked so hard to earn could be spent to save the very institution you assumed would protect it in the event of a crisis. But this is more than just a possible danger. It is, in fact, a true policy tool that the government has put in place to keep things from completely falling apart. This phenomena has happened before to people in places like Cyprus, where they woke up to find that their accounts had been changed without their knowledge and that their money had been frozen. There were protests and rage in the streets as a result. Despite this, most individuals still trust traditional investments. Most consumers continue to undervalue the asset class that might save failing. Financial institutions and perhaps even savings accounts in the event that traditional systems fail. Blockchain-based solutions and digital assets are progressively taking over as the new safe haven. This is a result of their openness and real-time transaction settlement capabilities. It is no longer just a way to trade in XRP during a financial storm. It's a lifeboat instead. It is clear from the way the elites are arranging themselves that they understand how crucial speed and liquidity will be in the time ahead. For this reason, rather of using traditional currency, central banks are investigating digital currencies and liquidity coins. Due to the fact that they are aware that the current system is inadequate, they are in a hurry to develop new infrastructure before the next disaster. They understand that using platforms that enable real-time payments is the only way to maintain value as things start to fall apart. The only people who may ultimately survive are those who can adjust to changing conditions. The financial industry is preparing for a momentous change as Basel III is set to be implemented in 2020-2025. The aforementioned regulations are not just another box to be examined. The whole financial industry will be impacted by changes in the global monetary system in the future. Every bank, from the biggest multinational enterprises to the smallest local lenders, will have to put in a lot of work to show that they are following the new, stricter laws. In view of the fact that regulators anticipate openness and proof of liquidity in real time, there will be a great deal of pressure. It will be necessary for all financial institutions to rebalance their books and move their assets toward those that can meet these real-time prerequisites for funding. Because of this, it is essential to get rid of assets that are hazardous or challenging to sell and to give more attention to assets that can be quickly turned into cash. People who are not ready or who do not change their ways fast enough are quite likely to go insolvent. Some could have to close their doors, which might cause chaos and confusion in the marketplace. This restart is not a matter of whether it will happen or not. Instead, it is a question of when it will happen. Considering that the countdown has already started, everyone knows that there is not much time left. Those financial institutions that are in possession of XRP or other digital assets that are comparable to it will be the only ones that will be able to handle the next liquidity crisis. By using these resources, you may speak with individuals worldwide, settle transactions instantly, and send money without depending on antiquated, sluggish systems. By leveraging these technologies, financial organizations are able to efficiently move money, reduce the risk of counterparty risk, and retain the seamless functioning of their business. On the other hand, other financial institutions must stop or freeze transactions. This might be a repeat of the opportunity that existed for early gold users before the Bretton Woods system was put in place. If you have a form of currency that is rare and widely accepted before the system formally requires it, you can get ahead of the curve and potentially influence your financial future in a world that is about to undergo a permanent transformation. Most news sites are likely to approach this as if it were just another dull financial policy that only affects those who work in large buildings and wear suits. But there is no denying that this is unquestionably one of the biggest changes in the history of the modern economy. The financial industry is about to undergo a dramatic change that will affect everyone, from CEOs of big firms to small company owners. XRP was seen as a speculative coin at one point in time. However, it is currently the foundation for a new digital money standard. It's not just a passing craze. The way that money is transported globally has changed significantly as a result of this. Demand will skyrocket once the regulations are put into place, but supply will disappear. A commodity that is more than just valuable will be provided to those who are able to foresee this. It is necessary. They will be the new rich class, the early adopters.